All right. Good evening. Is it battery assistant? Already streaming live, and I don't like this background noise at all. Wow. All right, good evening, traders. I can see people joining in. I'm trying to drop the link on our group page, but my system is hanging at this time. So please, we are just going to wait a little bit so that others can also join us. I send it to your WhatsApp. Check it. Okay. Is this it? Am I sending the correct one? I don't know about that. All right. Please let's be patient so that more people could join us. I don't know. You sound doing great. Sorry. Excuse me. All right. Good evening, everybody. Good evening to you all once again. So please, you can give me a thumbs up if you can hear me. If you can all hear me, please just give a thumbs up. If you can all hear me, please just give a thumbs up. So, can you mute? No, I can't mute. All right. Good evening, everybody, and I welcome you guys to today's meeting. Today is day two of the How to Pass Your Prop and Get Funded bootcamp training. And I want to remind you guys that it's a free bootcamp. Don't get yourself swindled by people. You know, there are people that they want to take advantage of things like this, and they will they will ask you to pay a certain amount of money. I have not directed anyone to collect money from you. So please and please, excuse me, please and please, um, be very smart. Don't let anyone take your money from you. I've not asked anybody to collect any money. All right. So again, welcome to day two of the bootcamp training. So today, um, okay, before we continue, I want to apologize to those that could not join yesterday's class. Uh, Let me say we were handicapped by Google Meet and Zoom. We could have held this meeting on Zoom, but Zoom did not give us enough avenue to accommodate more people. So, and there are about 1,300 people who registered for this program. About 1,350 people actually registered for this boot camp. So, and YouTube Live is just the best alternative to get people to plug in to join this program. So, I'm sorry about the cough, really. I made a recording of yesterday's class. I did a recording and I sent it to the group, and I hope that you people have checked it out. If you have not checked out the recording, please, after tonight's class, do well to check out yesterday's recording. So today there's no long talk. I want us to go straight to the point. Today is day two, and we are talking about trading plan discipline, and then trading psychology for pro firm accounts, and also we talk about analysis and execution. So I hope that we'll be able to complete it. And I told you yesterday that the trading psychology part is going to be handled by HillCity, right? HillCity is a member of ProCycle, and he's a versatile forex trader. He has wonderful results from trading forex and trading prop accounts also. So you guys are going to be learning a lot from UCT today. And please, if you have any questions, you may use the NGL link I sent to the group page, and we'll try as much as possible to attend to your questions. If not today, then it will be tomorrow. So please, uh, let's cooperate, and let's do well to attend, to listen to what UCT has to teach us. So the next voice you guys are going to be listening to is going to be UCT's voice, and have a wonderful class as it takes you through trading discipline and execution.
Good evening, everyone. You're welcome to today's call. And my name is Adekoya Damilola, as projected, and HillCity, as he has rightly introduced me. And here's my Twitter handle, HillCity underscore. Right. So tonight I'm going to be taking you trading discipline and execution. And the subtitle here is Mastering the Art of Consistency in Trading. All right, so let's get into it. All right, so here is the introduction. What is trading discipline, right? We've all had discipline in all of our trading journey, right? And to a large extent, I would not say anybody here does not know the meaning of discipline, right? So I define discipline, trading discipline, as the ability of a trader to stick to a structured and consistent approach in executing their plan, regardless of market fluctuations or emotional impulses. What do I mean? What I simply mean is this, right? For you to be disciplined in trading, it means that you have to have an existing structure that is consistent in executing a trading plan. But the irony is this, right? A whole lot of traders do not even have a trading plan to start with, right? You can imagine you are going on a journey, right? Probably you are going on a journey from, say, from Ogun State to like Abuja. Now, you don't have the roadmap, you don't have Google Map, you don't know where you are going, but still you just pick up your boots and you're like, oh, I'm going to Abuja. I mean, you're just going to get lost or get stranded at the end of the day because you don't even have a plan. You don't know where you are going, you don't know where you are headed to, right? So that is exactly the case of a whole lot of traders. When you don't have a trading plan, I mean, where are you headed to? So uh also, I want you to know the importance of this trading discipline, right? Because that is just the exact reason why it has been reinforced and reiterated over and over again. You hear people talk about trading discipline, discipline here, discipline there, right? The importance is that this trading discipline we are talking about reduces emotional trading. What is emotional trading? Now, emotional trading is when you don't have control over your own emotion in the market. Trust me, the market is full of fluctuations and your money is involved. So you want to do everything in your power to make sure that you don't lose money. And in this case, most people or most traders tend to get emotionally attached to the market, right? They want to sell when they see a candle, a red candle, just sprinting. They just want to join the red, immediately just pick a little scalp and just close. And all of those things will get traders nowhere, right? So you don't want to be caught up emotional trading. So if you understand discipline in trading, it will reduce all of those things or stuff such as emotional trading in your journey. Now, it will improve your consistency and your profitable execution, right? It will reinforce proper risk approach, and it will help you to continuously improve. All right. In this lesson, you are going to be learning of the intricacies of trading discipline. And what I mean by intricacies is the complexity of trading discipline, the psychology of trading, risk management, and building a solid trading plan. So I need you to pay careful attention here, because as it is, right, it is a very, very important role, or a very, very important point, that you understand discipline in trading and its execution. A lot of the time, people or traders tend to focus only on the strategy or the technical part of trading. And I'm telling you, that will get you nowhere, because if you don't understand everything that is intertwined with trading, you are going nowhere. Literally, a whole lot of people know so much about trading. In fact, they know every bit of price move. Okay, price is going to reverse here. Have you ever even wondered that, okay, what happens when you know, because I believe that it would have happened to a whole lot of people right here on this call. You know that price is going to reverse at this point, right? But it happens that you take the trade, but you still took a loss. Why did this happen? It is because of trading discipline and execution, not because you were wrong, right? You picked this trade, probably you set your break even early, market takes you out on break even, then move massively your way, or probably you took the trade, you were so scared, you were like, oh my God, let me just leave this trade. Then you just exited the trade, and all of a sudden, the trade started moving your way. In one or two ways, you missed the trade, but the trade you were correct, like 100% correct on the direction of the trade. Regardless, you lost money. So this is what happens, right? So there is technical aspects to trading, and there's some psychological and discipline aspects, and how you execute your trade in trading. So you have to bring all of those things on a balance, right? Before you will be able to move. It's just like riding a bicycle, right? If you don't know how to balance, bicycle have two legs. The front tire, say that is the technical aspects, your strategy and all. The back tire, say that is the psychology and everything that has to do with you, yourself, and the market, right? So you have to balance it before you can say, okay, you want to move the pedal and start pedaling and moving, right? So that is it. So let's move to the next slide. You may never make money from trading. This is a bold statement. I know a lot of you may be like, oh, which kind of course is this? Oh, my, don't tell me this kind of negative word, blah, blah, blah. But before you throw the stone, I want you to listen carefully. Of a truth, trading is indeed one of the most rewarding skill that you can ever have when it comes to, but it comes to it with its own shares of rules, right? Fine, trading is very, very rewarding. In fact, you've heard that you can put $10 and flip it into a 1,000, right? Definitely people are doing it. It's extremely possible. Nothing is impossible with trading. You can make a whole lot. In fact, you can create generational wealth from trading. Regardless, before you'll be able to do all of those things, you have to understand that these things as as its own set of rules. And you will agree with me that this world that we are in, Earth, operates on principles, and failure to stick with these universal principles is a call to failure. Now, let's take, for instance, the laws of gravity. It says that anything that goes up, right, a layman understanding, will come down. Now, you stay on the cliff, right, trying to defy that law. Just stay probably on a very high building, or probably a mountain or a cliff or whatever, a hill, then jump off from that high place you are standing and try to defy the law of gravity. You will know that Superman is just a fiction. By the time you break all of the bones in your legs or your arms and even break your skull, then you will know that rules are meant to be followed, right? There are rules that guides everything, all right? And in fact, trading is not different, right? There are rules that backs up what you must do, what you must not do as a trader. And these rules, you have to understand them because these are the complexities that are in trading before you can say, oh, right, it looks impossible to flip $10 to 1,000, but I understand the rules. Okay, I can do it this way, right, and still not get burnt. It is when you understand something that you can manipulate it, right? Trading is not a game, it's a business. And you really need to understand this because for me, when I was coming into trading, right, how do I put it now? I had this urge to always look at the chart like almost every time, like 24 hours, I'm staring at the screen. In fact, at a point in time, I felt like, oh, I'm even the one printing the candles because I'm there on 1 minute, on 15 minutes, on 5 minutes. I'm just there staring at how this candle operates, how this candle prints on the chart and all that, right? I see it as like kind of game because it is getting kind of addictive and all. But trust me, it's not a game. You are in it for a business because you are here to make money. Now, you have to understand this fact. Anything that involves transaction of currency for value is business. And this, in fact, is the cycle of trading. You have to treat it as such. Just like every other business, it comes with risk of making or losing money. Not only that, in this case, you have more tendency to lose money, which is why you've got to be smart with managing your risk, right? Just like every other businesses. In fact, there is no safe business because literally you are, even if you are buying okrika and selling, right, there is a risk of you buying, right, and you buying at a very high price and market value of the products that you bought drops and you'll be making losses. Or there's a risk that you even buy and people are not even patronizing you, right? A whole lot of things, risks. So there's risks to every side of businesses, right? And it's the same, exactly the same with Forex. So trading is not a game, it's a business. You need to understand that. Life is all about risk management. What do I mean by life is all about risk management? You have to also understand this fact. Anything that involves uh, transaction, right, of money or currency, anything that involves transaction of money or currency is business, just like I said the other time. And everything is in life is all about risk management. Let's take, for instance, uh, you sleeping, you waking up, you brushing your teeth, you bathing, you walking. All of these things are risks. Now, if you may ask me, how is sleeping a risk? Or how is brushing my teeth a risk? Or how is bathing a risk? Or how is walking a risk? Then I will tell you that you may sleep if you don't manage your risks. Probably you sleep and you close all your windows. You must have heard the news and you hear that people are being suffocated in the room, probably because of some fumes entering the room and they just slept and they just died, right? It is part of risk management to probably close your window. Even for thief to steal your goods or your belonging before you wake up, right? These are risks, right? How do you manage these risks? By locking your stuff up. Lock the door, lock that. They are risk management. Do you understand? Now, how is it a risk to brush my teeth? You could choke on even toothpaste. It's very possible. I've seen people choke on toothpaste, right? How is walking a risk? You can hit your legs on something and just get a broken bone. These are risks. You can even step on a nail. That is why shoes are made. Risk management, right? You need to understand these things because life in itself is full of risks. But understanding how to manage those risks is what makes you live a prolonged life, even like on a day-to-day activity, on a day-to-day basis, right? Now, uh, the psychology of trading. You have to understand also that there is this thing called fear, greed, irrational reaction, and revenge trading. Now, it happens to almost everybody, right? You are so scared, like you want to take a trade, you are scared. How am I going to do it? Especially when you are trading. A lot of people make excuses when they are trading small accounts. They be like, I don't want to blow this small account. But do you know that even if you are handling a larger sum of money, if you are fearful to trade a small account, you still have that issue with the larger account. Now, if you don't know, I'm just telling you this for free. If you are someone that is very scared to blow like a $10 account, you are being like, oh, I don't want to lose this $10. If you are to handle a 10K account, you will definitely cringe because you feel like, oh, this money is massive. If I like make like 1K loss, that's like 9K, man, that's too much for me. I mean, so the fear will be there. So you have to conquer it early. Greed is part of it. Irrational reaction is part of it. Revenge trading. And I think a whole lot of traders find themselves doing this. You see, all of these little points that I drafted out are as a result of things that I have seen play and repeat itself over and over and over again. Come to think of these things. Before you blow an account, right, there are patterns that literally play out. Probably you are not even taking cognizance of all of these things, but there are patterns that literally play out. But we focus too much on technical patterns, just like you say, oh, this is head and shoulder. That's a pattern on chart, right? Oh, this is like mitigation or breaker or something like that. Those are patterns, right? But we do not take time to evaluate the patterns that happen in our own behavioral patterns, like our own behavioral activities. We don't study all of these things because they happen over and over again, but we're not just paying attention, right? Let's take, for instance, you bought a prop account because this lesson is about passing prop account. You bought a prop account of, say, a 50K. Now, you take the first trade, probably you ended up in a loss. Second trade ended up in a loss. Third trade ended up in a loss. You take like 5 consecutive trades like that. Loss, 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 loss. Do you know that at a point in time, your psychology will be messed up? In that case, what are you going to do? Right? You see, a whole lot of people, I can tell you for a fact that a whole lot of people will start like being like, oh, I want to make my money back. You see, the moment you have that thought of, I want to make my money back in trading, you are gone. All right. So, revenge trading, in fact, it's a pattern that you have to look into. It happens almost every time. Just flashback, look back, and check all of the accounts that you've blown. You see that pattern will repeat itself over and over. You make some losses, probably very small losses. You'll be like, oh, let me quickly make this small loss. In fact, this loss is very small. Let me just scalp it, and make my money back. You enter into that trade with the commission spread and all of those things. You go out with an even bigger loss. Then you'll be like, this loss is getting bigger. Let me take it again. Then you enter into it again, and the cycle repeats itself until that account is blown. Right? You could even be over leveraging and all of those things. These things happens as a result of your psychology, your trading psychology, and how you handle your emotions in trading. Okay. Now, so how do you deal with this trading psychology? Most time, trading psychology problems stem from lack of confidence in one's method. And this could be a result of consistent losses over time, just like I've said. And many times, traders often ignore the problem and sort out a temporary fix, such as taking a break from trading or seeking out supposed better strategy without fixing the underlying cause. What am I saying in essence is that, you see, a whole lot and a big chunk of the problems of psychology comes from lack of confidence in your method, or probably your setup, as commonly said. Now, you see a signal from your trading method. I don't know what you are trading. Probably you are trading ICT, or you are trading algo, or you are trading what have you, supply and demand, whatever, right? You see a setup, and then you don't really have that confidence in your setup, right? You take the trade. Let's say you just take you saw a buy trade, you take the buy, pam, like that. The trade is supposed to buy normally, but then you exited the trade. Do you know that if you miss that trade, you entered it, then you miss the trade because you left too early, or you manually close the trade before it moved your way and all that, it will affect you psychologically. Do you know? Because next time, even if you are in a losing trade, right, you will be feeling like, man, I can actually wait in this trade. This trade could turn in my favor, right? And all of these things that we do that are outside our trading plan, or that are not consistent with a proper plan, a proper discipline, will always end up in us losing over time, right? Now, most times when we now face all of these psychology issues, what most of us think of is, man, my strategy is not working. I need to get a better strategy. And the funny thing is, you will jump from YouTube to another guru on Instagram, to another guru on Twitter, to another guru probably on Facebook and all that. But the cycle will keep repeating itself over and over and over again. Sorry. It will keep repeating itself over and over again. If we fail to fix the problem, the underlying cause of why we have been changing these strategies, which is what our trading psychology, our mindset with regards to trading. Now, instead of trying to, flip your strategy now, or trying to blame it on probably your mentor or something, or probably an indicator, go back to your charts and do your assignments, right? Go back to your charts and do your assignments. It is what we do here at ProCycle. There are times that we take consecutive losses. We are not saying, oh, we take all wins, right? We don't make losses. No, that's a lie. But the goal of your risk management and to keep your psychology in check and all of these things is that you want to make your losses small and your profit as much, so that it will cover up for your losses and you make profits. Because it is in the difference of your losses and your profits you make. Yes, the difference of your losses and your wins, you make profits. All right. So go back to your drawing board, look for what you've been doing wrongly, then find solutions to it. And I believe that that is the way that you will grow as a trader. And that is a better way to fix your psychology. All right. Now, another thing you can do is that you study why your trades go wrong. And in this case, you have to position yourself to take better opportunities. This will be viable, or this will be very, very correct when you do proper backtesting. Now, what do I mean by doing proper backtesting? Now, you take trades. A whole lot of us are guilty of this, right? As traders, we take trades, right? Series of trades in a week. Now, all of those trades, take for instance, we made lots of losses. Instead of us to actually go back and check why we made those losses, we don't. And how are we supposed to grow if we don't do that? Right? How are we supposed to grow if we don't check back on what we have been doing wrong? Even when you're in primary school, right, or secondary school, when you when your teacher gives you an assignment, he expects you to come back to class. Then if you get it wrong, you get correction back, right? You get corrections. Now, you have to, the reason why all of these things happens to you, or why you have to go through the rigorous academic sector in this way, is for them to instill in you this habit of checking out for corrections. And you have to bring that idea into trading. When you make mistakes, go back to your chart, check for corrections. It helps your psychology, because next time when you see that kind of event play out, it will tell you that, okay, this was the corrections that I made. In this case, this is how I will handle this situation, right? You can also do this. You can also listen to podcasts on trading psychology, or pick up a book in that category to build your mindset. It is very important. People don't talk about all of these topics, right? All of these little things, but they all matter, right? In fact, I can tell you for free that listening to podcasts, or listening to certain informations, right, about psychology, or about informative information. I don't mean anyhow information. I mean informative informations. Will help you shape your mindset, right? It will help you shape how you think about trading, how you perceive money, how you can grow better, how you can refine your whatever you are trading, and all of those things, right? In fact, coming to this session tonight is also a kind of listening to an informative stuff. Do you get? Coming to this session is kind of listening to an informative stuff. So these are things that really imprints on your mind and helps your trading psychology. So when you go back to your chart, your mind has something to work with. All right. Now, trading is not about the method that you are trading. Trading is about you. And this is why I tell a whole lot of people that your method or your strategy is subjective to whom you are. It is subjective to whom you are. I don't care. You can learn from the best guru. You can learn from, in fact, you can learn from that idolo that is turning $1 to $1 million. But even if it teaches you his method, right, if you do not work on yourself, you will still remain in that loophole you've always found yourself. So you have to dead this idea of, you want the holy grail, or you want this method that is loss proof or something. All right. And understand that you have to grow as an individual. You have to iron out your own discipline, right? You have to iron out your own psychology before you see that result, that big result you want to see from trading. Now, you may have been focusing on the wrong things all this while. Some of you even think that you need to learn a loss-proof strategy, or you need huge capital to trade. Yet to jump from this to that, only to keep spinning in that cycle. But I want to tell you, trading is not about your method. Trading is about you. All right. Now, building a solid trading plan. Now, what is a trading plan? A trading plan is a systematic method for identifying and trading securities that takes into consideration a number of variables, including time, risks, and investors' objective. Now, what all of this is saying is that for you to draft out a trading plan, you have to consider a number of things, including the time, right? Trading goals, your timing, market analysis, selected instruments you want to trade, your risk management, your entry and your exit model. And I'm going to be just touching on these points one after the other, right? Your trading goals. You can have a big trading goal. Say for instance, you have $100 capital. You are looking to, over a period of like 3 months, you are looking to grow that $100 into like $1,000 or thereabouts. Now I'm talking about setting realistic goals, not like flipping your account to like $10,000 with $100. I mean, now you have that long-term goal, right? Then how would you get there in that 3 months? Then you have to break that long-term goal into short-term goals. Okay, in a week, I want to be meeting this target. Okay, how many pips will it take me to reach this target in a week? Even if I make losses and I make wins, I think like how many trades and all that. How am I going to get to this in a week? Then you break it into weeks, right? You break it into days. These are short-term goals. Okay, we want to achieve this in a day. You want to achieve this, in days. You want to achieve this in a week, in a month, in 3 months, right? That is how you go about it, setting trading goals. Now, your timing. Some people trade New York, right? Some people trade London. Some people trade both, right? It all depends on you. But these are the things that you have to include in your trading plan. Now, this trading plan has to be written some way. It's not that you just have it in your head, right? It has to be written. That is what tells that, okay, you are serious and you are dedicated to doing this. And you have to follow it strictly. All right. These are rules that you are going to write down, pen down, and follow them strictly. Because if you don't do this, then it means that you are not ready and you are still taking trading as a game, not a business. Because every business has what they have, account book. They take stock, right? They know the number of items they have left. They know the number of items that is leaving their store. So as a trader, you have to have something that you trade, you write, right? You write your goals, you write what you want to do, you write all of these things. Okay. Now, market analysis. We have technical analysis, we have fundamental analysis. Technical analysis has to do with the technical aspect of trading, such as drawing your trend lines or what have you, drawing your other block or whatever, right? Or your supply and demand or your Asian range and all that, right? The fundamental aspect would have to do with looking at events, economic events. Probably you are using investing.com or you're using Forex Factory. You want to be checking for news. Maybe there is news, because many times people get into trades that looks good, and unfortunately, if there is news, it could even like spike against them and all that. It has happened to me a couple of times as well. All right, so you want to write it down in your trading rules before you take a trade. Probably in every day before you take trades, you want to look at the economic events of that day, so that you will know, okay, if it is a good time to actually be in that trade, because timing is very important. All right, now selected trading instruments. Now, I had advised people to actually go, or traders to actually go for like 1 to 3 pairs, especially for beginners, right? Look at 1 to 3 pairs, maximum 3 pairs, because you have your focus on all of these 3 pairs. It is very, very tough to actually keep track of dozens of pairs, right? Trying to master how this one works, because all of these pairs are independent of each other. Although, yes, price is fractal, price is almost the same, but their behavioral pattern is quite different. All right. So if you master how it works, how a particular trade works very well, you can easily, you can easily resonate with it. So I encourage 1 to 3 pairs. It's fine. Now, risk management. You have to define your risk management also. Your risk management and your risk threshold per trade. Everybody has a threshold. There is a particular threshold where you get to, where you eat and eat and eat and eat and you get tired and you be like, oh, I can't take anything anymore. That is your threshold, food threshold. Now, in risks, you have a risk threshold as well. There is a particular threshold that you get to. Probably you take losses. You have a 10K account. You take like $300 losses, $200 losses, and that $200 losses, that's like $700. Then you get to like take another $100 losses, $800. By the time you get to that $800 loss, how do you feel? Do you still feel very comfortable taking trades, or do you feel like the world is collapsing? Right? You have to understand that, okay, this is the threshold that I get to before I start misbehaving in the market, or I feel impulsive to take irrational decisions in the market. Write it down. And then write down the risk percent you are willing to take on each trade that you pick. All of these things are risk management, and it's very important for you to pen all of those things down when writing or when building your solid trading plan. Now, this also is very, very paramount, and people don't talk about it. Your entry and your exit model, right? Your entry is important, your exit is important. In fact, to a large extent, where you leave the market is even more important than where you even enter the market. Your exit is even more important than when you enter the market, because your entry, you can use 100 pips and you can use 100 pips stop and reduce your risks to fit that 100 pips without even risking so much. You can reduce your risks using your position size, but your exit is very, very important. All right, because if you don't take your profits on time, you don't know where to take your profits. You eventually lose all of your labor, right? All of the patience and waiting on trades and all that to the market, and it's very sad. Okay, so you have to include it in your trading plan. This is what you want to see when you enter a trade. This is what you want to see when you want to exit a trade. Very, very important. All right. Now, how do you ensure adherence to your trading plan? Now, I said you can achieve this by keeping a journal. This could be simply done using paper and pen. All right. That's the traditional way of keeping a journal. Keep paper and pen. All right. And you can as well use online apps like Notion, right? Or better still, to keep things simple, you can open a private WhatsApp, Telegram, or Discord group or server for yourself and keep track of every trade that you take. This is one of the things that me personally I do. All right. I open a group for myself and then I post my stuff there. I just post a screenshot the before, I post it there. The after, I post it there. Okay. These are the checklists of my trading plan. I want to see this, I want to see that, I want to see this, I want to see that. Before I take the trade, I screenshot it, I write my checklist. This is what I saw before I took this trade. Then I take the trade. If it goes my way, okay, this thing played out. It means that this what I saw makes sense. Then if I saw this thing and it failed, okay, why did I fail? Then I can question later, going back to the drawing board, back testing what possibly went wrong and getting better. All right. Now, that brings us to the end of tonight's session. All right. I believe that you are able to learn at least how to keep proper discipline and carefully build your trading plan around this. And if you have questions, I would be willing to take your questions tonight before we call it a night. Thank you very much for listening.
All, all right. I want to appreciate HillCity for that wonderful lecture. And this, I would like you guys to also appreciate HillCity and by giving him a clap emoji, you know, the clap emoji in the comment section, because I want to see that. Okay, so HillCity, they are saying thank you, sir. Uh, I'm not saying the clap emoji yet. Okay, all right. I guess the thing is slow. Okay, so yeah, that was a wonderful lecture, and to be honest with you, he has told you the truth about trading. Trading is not bread and butter. I was speaking with one of my friends today, and he was just like commending me for holding the class and everything, and I was like, trading is very difficult to that. If anybody comes to me and wants to like seek a career advice and tells me, okay, he wants to do trading, I might not advise the person to take trading. Now the question I'm going to ask the person is, okay, are you willing to lose money? Like, are you willing to lose 1 million naira? Like, you have the correct, you might have the perfect execution, perfect strategy, and but there are just circumstances in the market where the market is not just playing out, and it's not playing out as you'd expect it to do, and then it starts going against you, and you start losing money. Like, the situation where you keep losing money consecutively for 3 weeks, you know it's very tough on your psychology as a trader, or as a human being. We might think that, okay, we're able to bear one or two losses, but if you are bearing back-to-back losses, it's something that is not easy to bear, right? So that's what makes trading really difficult. The mental part, the mental truths that comes with it. And he has just told you, the way you can outlive that, you can outmaneuver that. And I would like you guys to please and please adhere to everything I has taught you. You can take advantage of this lesson again. Thank God it's on YouTube. You can rewatch it. You can go over it over and over again. You can subscribe to this channel, so that you'll be able to understand, a bit, to come back to the lessons that were taught. So, and I would just like to just go over a few things. So tomorrow we'll be talking about the best strategy and setup to trade and pass prop accounts. That will be handled by Adekoya tomorrow. And then I will be talking on how to secure your profit and withdrawal, and how to get to withdrawal tomorrow. And okay, I think I just have a few thoughts to share with you guys. Yeah. So okay, these are the three things I want to talk to you about. Just to touch a bit more on the trading psychology, that you have to create a plan on how to execute your trade before executing. Like, just like HillCity has said, always have a plan. Like, before, a good trader is someone that knows, okay, what's the stop loss? What's my stop loss? What is my take profit? And what lot size am I using? And also he needs to be able to wait for as long as that trade runs. Like, how either the trade runs to stop loss or it take profit, right? So you have to know that. So I just drew a chart here. You wait for your setup always. That's the first discipline you have to inculcate. Then you trade an instrument at a time, and you risk only 0.5% per trade. Please, this is what you have to adhere to from tomorrow. We are going to talk about this more tomorrow. So that's how we draw the class to an end tomorrow. Today we continue tomorrow, and I want to wish you guys a happy night's rest. So yeah, thank you very much. Bye. I will be answering your questions. I can see your questions. I'll be answering some of them tomorrow. Thank you very much.